Hi, I'm Natalie Brunell for Bitcoin Magazine, and we're talking about the fascinating 3-hour interview between the Bitcoin Standard author Saifedean Ammous and Michael Saylor. It was just released a couple of days ago, and we wanted to show you some highlights from that interview. And if you want to watch the full thing, it's about 3 hours long, and we will link it in the description. Okay, so in this first clip, Saylor and Saif talk about Bitcoin versus the other cryptocurrencies and the lack of regulatory clarity. Michael refers to the other coins as securities, whereas he references that US regulators like Gary Gensler have already recognized Bitcoin as digital property.
They're always so concerned about Bitcoin. They need to change Bitcoin, and they think Bitcoin is dead, and they want you to not invest in Bitcoin because they want you to join the gains until the regulators come about, at which point they start getting angry at Bitcoiners because, Bitcoiners aren't supporting us, and Bitcoiners are cheering on the SEC, and Bitcoiners are being statists. And it's pretty interesting, and I think that you also see that as well from a lot of the organized lobbying. I think a lot of the DC coin people, their modus operandi is to try and get, nobody lobbies for Bitcoin. That's the thing. Very few people, like if you get Bitcoin, you realize it doesn't really need you to lobby for it much. And you realize there's a very high opportunity cost for investing in lobbyists, and you'd rather just stack sats with it because Bitcoin is clear. It's very clear that it, as you said, Satoshi's innovation is real. The Immaculate Conception, it wasn't a security. It was obvious it wasn't a security. It was just a digital form of property that emerged organically on the internet. Nobody controls it. So there's no point behind wasting money on lobbying, but there is a lot of incentive for altcoiners to spend a lot of money on lobbying because it's very clear that their altcoins are securities. And so there's a lot of incentive to try and bundle in the altcoins with Bitcoin in order to try and pass it off as, and everybody wants their altcoin to be part of the small number of alts that are like Bitcoin. Ours is decentralized, ours and Bitcoin are decentralized, but all these other ones, let the SEC tear at them. I'm also wondering, what do you think in terms of, I think, in a sense, like the attack on Bitcoin, many Bitcoiners have been pretty paranoid about the idea that governments are going to attack. And it seems, even the China thing, as you said, yeah, they banned the mining, but they haven't banned ownership, and they haven't thrown anybody in jail because they own Bitcoin. They haven't criminalized it. It's not like owning cocaine. You're not getting searched and arrested for it. But it seems to me like, fiat world is fighting back in a sense by perhaps, people who are from the fiat world, they just, I'm not saying this is kind of a conscious conspiracy. It's just intellectually, they think of it as, the fiat coins as the altcoins because they're centralized. They allow us to do more tricks. They allow us to have more leverage. They allow us to have more credit, more financing. It looks to me like that is kind of the attack on Bitcoin. Like people who are not excited about the prospect of hard money and escaping fiat are thinking of, boosting all the non-Bitcoin coins. Like you think of somebody like Elon Musk coming in and choosing to pump Dogecoin. I think that's not entirely unrelated to the fact that, a lot of people coming from traditional finance are in the fiat mindset of money needs to be controlled by a group of people.
Well, I think that if the Bitcoin community just embraced the idea that Bitcoin is digital property and it's going to coexist with digital currencies issued by the United States or Europe or China, then 99% of all of the resistance and friction just disappears completely. And then what you realize is your debate is with gold, and your debate is with real estate, and your debate is over whether you should buy the S&P index, and it just becomes an investment decision. And then everybody that doesn't want to own Bitcoin because they want to own Apple stock just looks like they like Apple stock, right? Like if you want to invest in a VC venture, if you want to invest in a hotel, if you want to invest in a stock, if you want to invest in a collection of Picassos, these are all just different investment decisions that you made in lieu of buying Bitcoin. If you characterize it like that, then it becomes a lot less controversial, a lot less heated. and just step back and let the battle of the currencies take place between the currencies. I mean, the real battle right now is between the dollar and the peso and the naira and the RMB and the, et cetera, all the currencies. And there's no reason, if Bitcoin doubled every year for the next decade, it still wouldn't be but a small fraction of the money in the world. Right? So for the next decade, we could simply be good citizens, watch digital property grow from being 1 out of 500 trillion dollars, right? We're 1/500th of the property in the world or something like that. Why not just become 20% of the property in the world, become 200 trillion, if we're 200 trillion and there's 1,000 trillion, right, we'll be 20%. So at the same time, like if I'm gold, it's like the gold people, they want us to agree that we're both sound money and the enemy is the Fed. Okay, well, like, let's think about that for a second. I'm going to basically give the gold bugs 90% of the money. They're going to be worth 10 trillion. I'm worth 1 trillion. And we're both going to collectively agree that we want to topple 100 million businesses, all the accounting systems in every nation state in the world together. Like, why would I even bother, right? Why not simply just destroy gold? Why not just take the 10 trillion of gold and go from 1 trillion to 10 trillion? And how about, try walking into the boardroom of Disney Corp or Coca-Cola and telling them that we've decided that we stand for toppling nation states and the currency, and what we want them to do is buy Bitcoin. Like, I've said this before, you literally could line up everybody in every corporation in the world, hold a gun to their head and say, you have to stop taking dollars and switch your accounting systems. And you have to shoot them all. Because even if they wanted to, they couldn't, right? Nobody can change the fact that the world runs on dollars and the accounting systems are wired for currency. So we're picking a Pyrrhic battle. Like we're going to war over a nothing. Because if you just understand Bitcoin as property and you accept the fact that, okay, well, what's the negative? The negative is if I transfer it and I sell it, I have to pay tax on it. That's the negative. What's the positive? You're not supposed to sell it. Like the positive, like the worst thing you could possibly do, in my opinion, is encourage people to give up their Bitcoin. So it's not a problem that you have to pay a tax if you just never pay it. The current tax code implies that you should buy it and hold it forever. And the current tax code of currency implies you should get rid of it as soon as you can, because there's no cost to get rid of it. So if we simply looked at the world like that, then we would stop wasting so much energy.
In this next clip, Saifedean touches on whether or not the Fed will follow China's model of issuing a central bank digital currency, and asks Saylor for his thoughts.
What if I put, 10 billion of an altcoin backed by, I could have $100 million in capital. I could spin up Yo-Yo coin and have 10 billion of Yo-Yo coin. I could mint an NFT on it and I could trade it to myself 3 times from 100,000 to 1 million to 10 million. I could print it all with basically wash trades. I could lever it up 20 to 1, have 25, 30, 40 billion of Yo-Yo coin. And then I could use it to back a stable coin, and the stable coin becomes 200 billion or 500 billion worth of US dollars. That's the nightmare scenario, right? Where you've got like nothing at the bottom. You've got a crypto punk that circulated 6 times in blind wash sales that was levered up to an altcoin, that was levered up to a stable coin that was released. And now that stuff gets into consumers' wallets and it gets used for commerce and it becomes a systemic risk. So you can't blame the regulators in that way when they say, we don't like the idea that there's blind wash trades with no surveillance agreements. And we don't like the idea that the stablecoin issuers don't meet our standards as banks. And, the crypto community will say, oh, yeah, well, that's like, that's the regulators attacking Bitcoin. There's nothing to do with Bitcoin, right? Like I saw today, some crypto punk thing traded for $10 million. Okay. But, like if I sold it to myself 6 times and I started by buying it for a nickel, how much is it worth? Who could say, right? And there's no way to even figure out whether the person that owned the thing sold it to themselves. Like it used to be, my concern in an auction would be, you've got your best friend bidding on it. But we're much worse than that. We're at a point right now in cyberspace where you could spin up 100 versions of yourself and you could be bidding against yourself, selling to yourself, buying from yourself. What's it worth? It's like, what do you want it to be worth? How do you know? It's opaque, right? So I think that, these opaque markets are a challenge. And for the industry to grow up, you've got to go to the point where there's more transparency. Securities have transparency. Banks have transparency. Regulators have transparency. I think ultimately all this stuff has a huge impact on high velocity digital assets, right? Like NFTs and stuff like this, high velocity. Bitcoin, if you're holding it as digital property, properly understood, is low velocity. The whole idea of Bitcoin is I just buy it and I hold it like I own a building for 27 years. And if you're holding low velocity money for 27 years, right, then is that a threat to anybody? Not really. I mean, you kind of get to maybe at the end of the day, you'll get to a point where someone will be concerned about that capital moving out of a capital control environment. But it's like so far down the list of regulatory priorities compared to all these other things like rigged auctions, and hyper levered, self-dealing, that I think that it's almost like not even worth being on the radar right now.
All right, this next highlight touches on sovereign nations buying and holding Bitcoin, and Saylor discusses the idea of countries printing money in order to accumulate Bitcoin. Take a listen.
Like Microstrategy stock was 120, and then we flipped and it's up by a factor of 5. And what did we do? We basically bought some Bitcoin and then we started issuing stock to buy Bitcoin. Isn't that the same as a country buys some Bitcoin and starts issuing currency to buy Bitcoin?
Yeah.
Right. Yeah. So
I guess it's slightly different because it devalues the currency when you issue more of it. But if you back it with Bitcoin,
it isn't slightly different because when you issue stock, you devalue the stock, right? If you're issuing equity, you're diluting the equity. And if you issue currency, you're diluting the currency. But
the equity is a claim on the cash flows of the company.
And the currency is a claim on the assets of the bank that issued the currency.
If it is redeemable if it's redeemable in gold or Bitcoin, then yeah. So that's what they've got to do. They have to go on a Bitcoin standard.
Well, let's be extreme, right? What happens if UAE buys $10 billion of Bitcoin and the price of Bitcoin then increases by a factor of 20? And next thing you know, they've got $200 billion worth of Bitcoin, and everybody in the world knows they've got $200 billion worth of Bitcoin.
Well, and the first thing that's going to happen is the Saudis are going to want to buy more then.
Yeah. So I think the point here really is, yeah, you can spend a lot of time fantasizing about how you never want any banks to buy Bitcoin, and you never want any companies to buy Bitcoin, and you never want any governments to buy Bitcoin. And since they're not going to ever buy any Bitcoin, you're the enemy of the banks and the companies and the government, right?
Yeah.
Or, right, and you see that narrative, right? Like, right, banks are the enemy of Bitcoin, companies are the enemy of Bitcoin, not your keys, not your coin, the government's the enemy of Bitcoin. But the other possibility, which just turns the entire thing on its head, is how would you feel if you woke up tomorrow and you found out that Goldman Sachs did buy $10 billion of Bitcoin and UAE bought 20 billion of Bitcoin? Would you be angry? By the way, your Bitcoin would be trading at like $4 million of Bitcoin. And you could be angry and say, no, no, give that back to us. I want to go back to $50,000 Bitcoin. Look, if institutions weren't involved in Bitcoin, Bitcoin would be trading at like 8,000 right now. Right.
Yeah.
If you look at, the last 18 months. So you could we could unwind that and you go back to $8,000 Bitcoin, or you can move forward, but it's just a taste. So, what's my big point here? It's like nobody can predict how the future will evolve, except to make this one observation. People are generally rational and they take the path of least resistance. And so at some point, it's possible that someone's going to buy the Bitcoin, not because they agree that with your most extreme vision of no governments and no companies and living together peacefully in one world currency. Maybe that's not why they're going to do it. Maybe they just want the money.
Now, this next clip is probably my favorite part of the interview. Really interesting information that I've been thinking about ever since. Saylor and Saif talked about borrowing money in order to buy Bitcoin and borrowing against your Bitcoin. Here's both of them talking about a Bitcoin debt strategy.
I want to ask you, what do you think is the correct strategy to do in terms of debt? Because we had this discussion in the last time, and it was in late February when you came here for the last time. And, you said things are going to be different from now on. We're not going to get major drawdowns in Bitcoin. You said, something like 30, 40% probably. I said, I can see us losing 70, 80%. Since then, we haven't had 70 and 80, but we did have 56%, which is significantly large number. So a lot of people who might have taken on the strategy of borrowing might have gotten wrecked and lost their Bitcoin. So what do you think is the correct strategy to do? So you want to borrow, but then if you're borrowing, you're leaving yourself vulnerable to price fluctuations. You could get liquidated.
Okay, well, the first question is who's loaning the money to you, right? And what are the terms of the loan? So Bitcoin's up 163% on average each year for a decade. If your time horizon is 4 years, right? I think no one ever lost money holding Bitcoin 4 years, right? There's like a 2-year time period when it was pretty brutal, but otherwise, you want to have a 4-year time horizon. And look, if you were borrowing, you could have borrowed money on your credit cards, right? You could have borrowed money at 15% interest and you still would have made 150% yield, right? So there's almost no interest rate. Nothing between 0 and 15% that would have been too much in that entire time period. Now, if you look out for the next decade, what's your forecast? I think that expecting a 20% appreciation is not unreasonable on the next 2, 3, 4, 5 years. Will it go faster? Yeah, you would expect faster than that. But what it means is that any interest rate between 0 and 15% is probably fine as long as you have intent to hold for 4 years or longer, because you could, in theory, get a drawdown in 12 months, right? That would put you underwater. So you can't have any loan that comes due. So if you look at the loans that are safe, right? Any loan you can roll forward, for a reasonable amount of time is probably good. A home loan, a 10-year, 15-year, and 30-year mortgage against property is a no-brainer. The best sources of debt are subsidized by the countries, the nation states, right? So in the United States, we subsidize debt against real estate property, especially conforming loan, but even non-conforming. We subsidize conforming loans via Freddie Mac and Fannie Mae, and you could borrow money at 2.5% interest. It's not mark to market. So if you had any equity in property, you could pretty much borrow at 2.5% and you could invest at 161%, right? So what's the risk of that? I don't see the risk, right? Is Bitcoin going to go up more than 3% a year for the next decade? If so, then it's a mistake not to maximize any kind of home equity loan right now. The United States government is supporting the mortgage market, even in jumbo loans via buying mortgage-backed securities each month. So even on jumbo loans and the like, right? I mean, isn't the cost of debt for lots of things 3, 4, 5%? I think that any of these loans that are south of 8%, they seem to me like pretty good money for an asset which we can reasonably it's going up at 20x that rate, right? So if they're not marked to market against the Bitcoin, it's a non-question, right? Now, I think the real issue is would you borrow against your own Bitcoin? Well, if you borrowed against Bitcoin with a loan to value 25%, you're probably safe. But I try to avoid, if I was going to be marked to market, I mean, the rules in the equity market in the US are you can't normally lever up more than 50% loan to value. And there's good reason for that, right? If you had $1 million of assets and you borrow $500,000 and then you have 1.5 million in assets, if you were to get a 70%, a 66% drawdown, right, then you're going to get a margin call, right? So I think that when you lever more than 2 to 1, you put yourself in a situation where you can get wiped out. Obviously, everybody in the crypto area in the community is leveraging between 2 to 1 and 20 to 1 or 2 to 1 and 100 to 1. That's why they get forced liquidated all the time because they're doing massive leverage. I personally I'm not a real big believer in borrowing money that gets marked to market because you get this destructive cycle, right? Where the asset trades down. And if you ever do get a margin call and you're uniformly in that, you could get liquidated, then you're wiped out permanently. So I don't think that's a very good thing. But if I had $1 million of Bitcoin and my choice was to sell $100,000 of it to pay my living expenses or borrow $100,000 against it at 6% or 7 or 8%, I would probably borrow the 100,000, pay the 8% and keep the $1 million of exposure, then sell it. Because if you sold 100, in order to sell it, you would have to actually sell, in some cases, up to 200,000. Like if you live in California and you have $1 million of Bitcoin, you would have $800,000 of Bitcoin the next day. You would pay 100,000 in tax to the state of California. You would have 100,000 to live on, and your stack would be reduced to 800,000. Right. So if on the other hand, you were just to borrow 100,000, you would have a loan to value 10%. And you would incur $8,000 in interest over the course of a year. And you would have $1 million appreciating at whatever Bitcoin appreciates at. So if Bitcoin appreciates at 20%, you'd have 1.2 million the next year, right? And then you could do it again. You could do it ad infinitum, right? At that level. So you just have to be able to stomach the volatility. The way you stomach the volatility is you keep your loan to value really low, really low. Even smarter idea though is if you're a dentist or you have some kind of business, finance your cash flows. Like you have a business, right? If you can sell equity in the business, that's a way of financing the business. And if you mortgage the business, that's a way of financing the business. And both of those have the benefit of not being marked to market loans. Well, let's take the extreme. What if I offered you $1 million loan for 100 years on against your personal signature, and the interest rate was 3%? Would you feel it's risky to buy Bitcoin with that? Like, what's the worst that could happen?
Not much.
Nothing, right? You'll be dead in 100 years. The worst that could happen is in 100 years after you're dead, the Bitcoin is worth less than $1 million, right? See, so small chance. Maybe you can come up with some way. Bitcoin goes to zero the day after you take the loan and you can't pay the 3% interest, then I guess it comes due. So slight risk of owning the Bitcoin. But you see, as the term of the loan extends, as the interest rate falls, and as the collateral changes, debt goes from being debt to being equity. What if I just gave you the $1 million forever and no interest rate and no redemption rate? That's equity, right?
Yeah.
Would you take that and buy Bitcoin with it?
All right, so we all know that we're experiencing inflation here in the US, but we're also seeing hyperinflation in other countries like Turkey. So in this part of the interview, Saylor and Saifedean discuss the current inflationary environment globally as it relates to buying Bitcoin.
So what are your thoughts on small businesses? You've mentioned Tahini's restaurant, Bitcoiner's favorite Middle Eastern restaurant, adopting the Bitcoin standard. Do you have any tips in general for small businesses, what they should do?
Well, I mean, you define your treasury strategy and have a savings account and a checking account. So I would keep somewhere between 1 month to 1 year's cash flows in the currency that most of your costs are denominated in. So if I had liabilities in dollars or Canadian or euros or whatever, I'd keep a balance in those liabilities. And then all the excess capital you have, I'd sweep into Bitcoin. And I'd sweep cash flows in excess of, like we have a target number. Normally it's like 50 million. And if, I'm always talking to my finance people. Are we more than 50 million? Do we have a little bit of extra, And then we sweep the extra into Bitcoin. And then otherwise, if you're a small business, look, if you can negotiate a credit line against Bitcoin, it doesn't hurt to have one. Silvergate Bank gave a credit line and issues credit lines to people like Marathon, the Bitcoin miner, and they can borrow money against Bitcoin. So if you have a credit line against Bitcoin and you can establish a banking relationship, at some point that could be interesting. The other thing is, if you're in an inflationary environment, once you've adopted a Bitcoin strategy, you have a use of proceeds for capital. If you didn't have a use of proceeds for capital, then selling equity is dilutive. But if you have a use of proceeds for the capital that actually has a higher theoretical return than the growth rate of your business, then selling equity is accretive. Like Microstrategy sold equity. You saw just this week, I announced we sold $82 million of equity and we bought $82 million of Bitcoin. Now, for 20 years, we didn't really sell much equity. And the reason why is we didn't really need the capital, so we'd just be diluting our EPS and diluting our cash flows. But if your small business is going to grow at 10% a year, and you think Bitcoin is going to grow at 40% a year, then if you sell equity at a fair price and you convert it to Bitcoin, then in fact, you're actually strengthening your balance sheet and you're increasing the growth rate of your business, right? You just quadrupled it, right? In theory, if you basically sold equity equal to your entire company and put it in Bitcoin, you just did a merger with a company growing at Bitcoin rate 160% a year with your small business growing 5% a year. Okay, so that's MicroStrategy did that, right? We took a $500 million company with $500 million in capital growing 0% a year, and we turned it into a $500 million company growing 5% or 10% a year with $6 billion of capital growing 160% a year, right? So that's the Bitcoin strategy. So I think small businesses, if they can raise equity or if they can raise debt, like if I was a doctor's practice or a dentist practice or a restaurant, if you could borrow money against that at a reasonable term and convert it to Bitcoin, I would do that. I would finance my equipment. I would finance my real estate. I would finance my cash flows, and I would do it with any combination of debt or equity. Now, the caveat here is, anytime you do a financial transaction like that, you got to find a counterparty you trust that isn't a vulture. Right. I mean, you could do an equity raise where you thought you were getting a good deal, but they insert a clause that says, if you don't show up to work on Tuesday, we get to seize your business and everything, So, and I once borrowed money to lease some computer equipment, and I thought it was good terms, like 6% or 4% interest. And when the lease came due, there was a clause in the lease that required that we return all the computer equipment with all of the plastic face plates in perfect order with the serial numbers intact. And the face plates were worth like 15 cents. And they'd been removed like 3 years earlier and thrown away. And so the bank basically tried to hit us with like a $4 or $5 million penalty clause, which would have tripled the cost of the lease. Because on page 98 of the lease, we were supposed to return a 15-cent faceplate with a $3,000 computer. So my caveat here is, assuming you know how to do these equity transactions and assuming you can borrow the money from someone you trust that is not a loan shark, then you should take the capital and you should buy Bitcoin. If you don't know how to do that, you're in over your head, right? You'll probably just hurt yourself. So, I mean, it's always possible to snatch defeat from the jaws of victory through poor execution. So.
That's extremely valuable information. I really appreciate it. I think a lot of people will benefit from learning these lessons. Dorian has a very good question for you, which is, have you considered taking on debt in currencies other than the dollar, since you think that they're getting inflated faster? And I think I agree. Wouldn't it make sense to use all of your businesses abroad and lever up on
it's an interesting thought, actually. I'd have to talk to my finance people. Like, in theory, if we could take on debt in weaker currencies, like a credit line, that is a good idea. Well, I think we've just been focused on other things, but it is good if you can get it to a size that's material to be worth the trouble.
And in this last clip we wanted to share with you, Michael Saylor is asked point blank, is Bitcoin money? Now, he's always made a point to say he doesn't think Bitcoin should be considered a currency, instead advocating for its identification as digital property or a digital store of value. And he goes into his thoughts here.
The US dollar is like the currency component of money. And in a hyperinflating economy like Venezuela, there's still a currency, it's just collapsing. And then there's a property, but then in the middle, what's interesting is that if the dollar is sitting in Venezuela, it looks like a store of value to the Venezuelans, because the dollar will hold value for like 3 to 7 years or 3 to 10 years, and the Venezuelan bolivar will hold value for 3 to 7 weeks or less, and then Bitcoin will hold value for 3 centuries. And so I almost look at these assets as having a different half-life, like that. Like, what's the half-life of your money? And I would say the half-life of Bitcoin as money is forever. And the half-life of the dollar as money 10 years ago was 10 years. And the half-life of dollar as money today is 3 years.
3 years, yeah.
Right. And so if you think about, and the half-life of the bolivar as money might be 3 weeks or 3 days, I don't know. But if we start thinking about these assets in that way, then I think it's kind of helpful, because what you realize is there are very powerful political interests that will designate one asset. And as long as that interest, as long as they exist, as long as the United States exists, they will have some influence. But you don't have to be a victim to what is the word? To the orthodoxy that there can only be one thing that's money. Once you understand that there are 3 things that could be money, then you can simply mix your portfolio with a mixture of a little bit of the weak one, a little bit more of the mid one, and a lot of the good one. And I think that's a very helpful metaphor for people.
Do you think that Bitcoin as digital energy is the most important attribute of Bitcoin, or the most forward-thinking concept about it right now?
I think by the way, I ran this survey on Twitter. I don't know if you saw. I asked people, do you think Bitcoin? I asked, is Bitcoin digital gold, digital property, digital money, or digital energy?
Oh,
It's like on my Twitter. It's very interesting.
okay.
So here's what I think. I think that the most powerful concept is energy
That's
and
what I
digital
think.
energy.
Yeah.
Because I think that the entire universe is made of energy. Like the earth is energy, a building is energy, matter is energy. And I think that energy is a more powerful idea than matter. Matter is a static instantiation of energy, but energy is the pure idea. So if matter is energy and energy is matter, then energy is the highest, cleanest, purest, most useful form. We talk about money. Money is capital as energy, or as I can look at all the capital stock in the society and say all the buildings, all the companies, all the products, all the commodities. That's one view of the capital stock. And the other view of the capital stock is all the money, and they should balance sort of in some way. And I could look at the world as saying it's all the matter in the world. And then I could snap my fingers and I can turn it into energy, right? And then I could turn it back into matter. And that's what Einstein told us. So I think that once you understand it as digital energy, then you realize that it's a lot more than a store of value. If I wrap myself in, like right now, if I wrap myself in digital energy, I could move through cyberspace with greater substance and creditworthiness. Like, I think that the solution, for example, to cybersecurity is everybody has to post a certain amount of Satoshis as their credit deposit or their security deposit. And then whenever you hit a website or DM someone or show up to a meeting or you post an offer or you make a comment, then you have that security deposit. And then if you break the rules, like you lie or try to cheat someone, then you would get fined by that platform, like a speeding ticket or the like. And in that world, that Bitcoin on a lightning rail becomes digital energy, which provides cybersecurity at the speed of light. And it's a very big idea, a lot bigger idea than I'm just going to store money in digital property instead of in a house, right? It's like,
that might be worth a short book.
It's like if I want to give form and substance, and if I want to give consequence in cyberspace, then I need digital energy. Right now, there are no consequences to bad behavior. So there are 1 billion malicious attacks an hour, and there are no consequences. And one of the problems is because we can't convey digital energy in cyberspace. But it's beyond the scope of a quick answer. I would say right now, coming back to my survey, most people, like 40%, thought digital gold. That resonated with them. So digital gold is the narrative that the public is ready to embrace. And that would make Bitcoin 10 to 20 times bigger than it is right now. You can argue that digital gold easily takes you from $1 trillion to $20 trillion market cap. And maybe that's fine, right? So we can basically double 3 more times or 4 more times before we outrun that idea. Digital property is the idea that we dematerialize every building and all the land and everything you could possibly own as a store of value. And that's a bigger idea than digital gold. But digital energy, digital money it's even more powerful than digital property, right? It's like all the economic energy. And so that's a more powerful idea. People don't really appreciate money right now. You could almost say that since 1971, there's been a attack, like a psychological ops attack on the value of money, like where the political system attempts to undermine the value of money. I mean, money's gotten a bad name because what is money? If it's the dollar and the dollar loses 7% of its value a year for 50 years, then then the idea that money is valuable has been kind of systemically undermined for 2 generations almost. But if money was properly understood, sound money, then sound money would appreciate in value. And then once you understood it as sound money, you're like, well, sound money means digital property that's reasonably liquid for commerce, that's a medium of exchange and not just a store of value.
Mhm.
And I think that takes it from $100 trillion type value proposition to $250 trillion or more value proposition.
All right, those are just a few of our highlights and favorite moments. Make sure to listen to the whole interview. It's 3 hours long, but you will not regret it. And for more headlines, head to bitcoinmagazine.com.
Yep.